my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil markets. I'll start with Paris Rapeseed. Okay, as I said 5 weeks ago here, there's two things to note. I've mentioned these before now quite a few times. So, firstly, if we set aside the island bottom in June, then we have an ascending triangle formed from March to mid-August, of which we've seen a breakout over the upper trend line, currently 571 3/4, 8 weeks ago. This had a provisional target X in the 617.5 area, which was a big ask at the time, but which came true 2 weeks ago. The second pattern was to look at the action since April this time, exclusive again of the island bottom as a possible bull channel. This pattern had a provisional target X1 in the 614 3/4 area, which also came true 2 weeks ago. That's what I left you with the last 3 times or so. Since then, specifically 3 weeks ago, prices have broken higher, and since this break higher gave me a chance to tidy up some of these now surplus projected Fibonacci levels, such that we were left 2 weeks ago only one, the 100% projected Fibonacci level at 643 3/4. This 100% projected Fibonacci was reached, well, it was reached last week and again this week on the way down. By now you can see that I was starting to run out of such potential targets on the top side. Anyway, this tidy up also revealed another separate rising wedge pattern, this one originating from the June high and low, with the upper trend line currently 593 and the lower trend line being the uptrend, currently 591 1/4. Interestingly, starting at the island bottom. This separate rising wedge pattern reaches its apex at the end of this week. We had a break higher from this pattern 3 weeks ago, with an initial target X2 in the 656 area, which I'd also outlined, and which was another big ask, but which was achieved last week. The only other pattern to note has been a recent September-based ascending broadening wedge pattern, currently 667.5 to 705 3/4. On Monday of this week, the market broke out of the downside of the pattern. Now, I detailed last week what you could expect in the event of a break, and I quote, "A break upwards will be about 56 euros on top of the value of the upper trend line when it was broken. Break downwards will be about 65 euros off the value of the lower trend line when it was broken." The only other two things I'd add is, firstly, don't force the break. It stays within the pattern, then let it stay there, and beware of false breaks, end of quote. Hence, with this break low, we could be looking at a move down to the 587.5 area. However, as we've seen yesterday with the bullish Harami action and today's bullish action as well, this market may have made a false break lower this week, and perhaps more importantly, it may have made a possible bullish halfway hesitation with the action from mid-September today. If that turns out to be true, then we could see an upside target for such a move in the 730 area. Now, I'm still not ruling out the move down to the 587.5. It is still too early for that, but it is well to be prepared in case the market rises up to the 730 area. Winnipeg Canola. There are, as I've previously said here, two patterns showing, both having running to fruition, seemingly not as yet showing a sign of which would be the more dominant. We have a descending triangle from early July and a sideways triangle also from July. The upper trend line for both is the same, the May to date downtrend, currently at 863.10, which the market broke higher 2 weeks ago. Now, for the descending triangle, we have a base of the congestion between 819 819.40 area. I have to add a caveat here. Since I first started to look at this as an idea, I have been underwhelmed. I'm not happy about this pattern and would rather call it a smaller descending triangle from mid-August with the same downtrend for ease of use and a base on the 840 area. Anyway, the second pattern is the sideways triangle has, or should I say had, an uptrend breached four and 5 weeks ago, currently at 901.5. Oh, this breach has been an odd one, as prices initially continued more or less sideways, then started moving along higher with this same uptrend. Indeed, all this week so far we've tangled with it, and anyway, 2 weeks ago I gave some levels on the upside. These are still valid, so to recap, with a new smaller descending triangle we have an initial potential target X2 in the 930.80 area and a secondary target X3 in the 946.5 area. For the ragged sideways triangle we have an initial potential target X4 in the 968 level and a secondary target X5 at the high of the market in the 1008 area. To be honest, I am not in love with any of these three patterns I've indicated, but of the three right now, smaller descending triangle with an upside target in the 930 area seems to be the most likely. I'd also like to remind you that secondary targets are extremely hard to fulfill anywhere. Just keep that in mind. Over the last few days, things have not become clearer. You see, we had an immediate countering shooting star pattern type 1 bearish last Friday after last Thursday's bullish engulfing pattern. The market duly gapped lower over the weekend with a gap between 910.70 and 912.30. Not the biggest of gaps, but sufficient. Then with Monday a holiday, Tuesday and yesterday's actions seemed to support the move lower with a 2-day inverted hammer pattern. Now, inverted hammer patterns are interesting as they are traditionally seen as a bullish reversal, but the data suggests that nearly 7 out of 10 times they end up being a bearish continuation. So I was interested to see which way the market would go today. And at first sight today, it looks like the market is following tradition rather than data and clinging to the lower trend line of the sideways triangle, as much as it has done in recent days. Bursa Malaysia crude palm oil. First off, please continue to try and ignore the color changes on the labels in the daily chart. There is no special significance to them, it's just my charting system playing silly buggers once again. Anyway, 4 weeks ago we had a gapping move down through the following. The short medium moving average currently 45.52. The medium moving average currently 42.69. And finally the market stopping short of testing down to the congestion supports between 40.10 and 39.53, which had previously seen emerge from within the rising long moving average, currently 41.05. This halt and reversal back up with a gap set the stage for the start of another move, a move I had intimated weeks beforehand. You see, the move up from the low to the high 3 weeks ago gave us a weekly key reversal up that week. Additionally, the follow-on higher 2 weeks ago, especially the gapping moves higher, gave us a rare monthly key reversal up here in September as well. So why are these so anticipated and important in my eyes, other than on their own as a standout patterns? Well, it is because a little while ago I laid out a scenario for a potentially very, very large bullish pattern. It is to look at the whole of the May to date action, including the sideways weeks over August and September, as an extended V bottom. Now, this pattern is not that common, but it does have some heavy merit here at this time, and by heavy I mean some really heavy merit. So, to give an idea of the potential for the move higher, let's look at the action since the low of July up to the high in August as the size of potential move. Well, that may happen. Thus, it could be quite large, and it could also still be as well a simple bull flag stroke bullish halfway hesitation. However, if it is the larger extended V pattern, then we'll have the backing of not just the June to date action, but all the actions since May. Now that's quite a lot. Initial idea on the action just being a large bull flag stroke bullish halfway hesitation, well, that gives a potential target X in the 53.75 area, way above the current top of the market chart I've got, and a very, very big ask. There is an even bigger secondary target for this pattern up in the 55.25 area. but I'm not going into that too much until we see prices approach target X. Two final things. First is that the bullish Andrews pitchfork for the 2021 action, and especially the middle tine, currently at 48.87, still seems to be the main bullish incentive here. My drawing of this bullish Andrews pitchfork so many weeks ago had been a bit speculation on my part at the time, but it's still maintaining its validity and prominent bullishness. The second is to regard the very recent mid-September to date action as a bull channel, currently 49.53 up to 53.45. This seems to have some merit, especially as the market utilised the lower bull channel line and middle time combination 2 days ago as the base of a large key reversal up and bullish engulfing pattern. I think I'll leave it at that for now. I'm hoping next week things will become even more clearer. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.